Your speaker's low. What's that?
So I've got 4 slides
Okay.
for this one. Hey, everybody, welcome to the Sense of Things. It's Ron and Jeff here once again with another episode for this week. It's going to be a short one this week. We're rolling into the end of the week of the 26th, and there were some big numbers that came out this morning that had some effect on the market. We saw the market go down. So let's talk a little bit about it and see what affected it. So stay tuned. We'll be right back on in just a second. Hey, everybody. Welcome to the show. Ron, how you doing, my friend?
Good morning. Doing well. I guess we got some economic data to go through, as that always comes in. But can we believe the numbers? It's one of those things.
Yeah, I hope that the numbers are right because they're actually moving in the right direction. So
I hear you. All right, what do you got?
All right, let's kick it off here. We got right out of the gate this morning 2 things big. First, on GDP. Second quarter GDP shocked the market this morning because it came in, expectation was 3.3%. The range of expectations was between 3.3 and 3.5%. And it actually came in at 3.8%. Now, of course, the market saw this as bad some way. I have no idea why, but I think it's mostly betting against what they thought, and this was outside the range, and so they have to cover all their bets and everything else. What does it mean in reality? This is a good thing. The more our GDP goes up, that means the more revenues we generate, and if you watch the show that we have coming up, we're going to be talking about that next week, of some of the things that we need to understand about money coming in versus going out. So when we have a higher GDP, typically that means we increase our revenues coming in, which can certainly help to offset our deficits that we have or the lack of money we have coming in.
Yeah,
One
I
thing
think
it does.
the main reason why the market is selling off is because people are thinking this. They want lower interest rates, right?
Yep.
But the economy is doing so good. Why do we need to lower rates?
Yeah. Once again,
This is
who
the
knows?
argument. This is why whatever the administration wants, how are you going to lie with these numbers? And an expanding economy is good. That's what the GDP is showing. So if it is expanding and it is doing good, why do we need to lower rates?
Yeah. I think we're seeing it roll out in some other things that, yes, GDP is good, but there's some other things that are having some effect. We're seeing some wild slowdowns in the real estate market and everything else. So I think that's where I would say interest rates really need to come down because it's having a massive effect in real estate, which then falls out into the market even farther, which may have some effect on this later on as a result of that.
Yep.
All right. Second thing came out today, jobless claims. So once again, market was shocked. The consensus was 238,000 jobs lost or jobless claims. Consensus 226 to 240. We came in at 218. Once again, the market went.
Same theory.
Oh my God. Huh?
Same theory.
Yep.
If not as many people are losing jobs and the economy is doing good, why do we need to lower rates? That's the mentality.
Yeah. But once again, I look at, yes, I get it. I understand. But once again, what y'all are doing with interest rates doesn't seem to have an effect one way or another. So why not lower them farther at this point? It's not showing that things are overheating. It's actually things are improving at that point. So I don't know. I don't know what the Fed thinks. It just, once again, I think it's going to have some effect on some other areas. All right. So what's the biggie for this week? And probably this would be my guesstimate of why the market is on pins and needles today is PCE comes out tomorrow on Friday. And this is the number that apparently the Fed looks at. So I'll be interested to see, does personal income expenditures go up significantly this time? Is that a wild number that goes up? Which at that point, is that where the Fed finally goes, okay, maybe we've overextended ourselves at this point? What's your thoughts?
I've looked at these numbers in the past. I don't know. Personal income, I this is the whole thing. Like we just reviewed two important ones, right?
Yeah.
Obviously the GDP is the big dog. The jobless claims come out every single week. So if
Mm,
both of those are showing the economy is doing well and we don't need to raise interest rates, what does the
yeah.
PCE have to come out tomorrow to say we do? I'm just looking at this. What's the most important factor, the ingredient in this PCE that we should be looking at? All right, hold everything. We've got to do something because the PCE, for the most part, has been pretty moderate over the last 6 months.
Yeah. Yeah. Which the argument had been all these tariffs are going to have a huge effect. They really haven't. What I would see where kind of the Fed goes into emergency mode is if we see this number on the downside, if you see PCE go down, that tells me, okay, that's not good because you're starting to see deflation coming into the market at that point. If you saw something drastically on the deflationary side.
Yep. Yeah, I'm not a big look when you're doing PCE, PPI, and all that
Yeah.
other stuff. I have never heard, other than when financial media blows it out of proportion, I have never heard somebody talk about PCE or PPI or even CPI, which is the
Mhm.
bigger one sometimes,
Yeah.
ever look at one of those numbers and go, all right, pump the brakes. We've got to stop everything. It's usually the GDP number, right?
Yeah.
So my point is, what could possibly come out tomorrow that's going to push the market up 1 or 2% or go down one
Mm.
or 2%? I
Yeah.
don't see it. I don't see it unless the PCE remains relatively elevated, and
Mm.
that coincides with GDP, that coincides with the
Yep.
jobless claims, and that just means the market
And
may sell off more because why do we
yeah,
need a rate cut?
yeah, because the Fed, yeah, then the Fed says, hey, we're data dependent. Yeah, we're data dependent when it's convenient for us. When it's not, we're guessing, doing gut guesstimates. But yeah, I could see that. If we see elevated PCE tomorrow, then that falls with the Fed going, hey, GDP's up and jobless claims are down. So that's our mandate. And PCE's up. So we think inflation's coming in, blah, 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 blah. The usual BS gobbledygook that they come up with. Once again, I agree with you. I would say if we see PCE up tomorrow, we could see a sell off going into the market.
Yeah, I agree. That's the fun part about being in my time zone. You got to get up really early for that.
Yeah.
And I watch the futures before I go to bed, and I look at them before I leave in the morning. And it's very interesting to see how this is going to push it. I think we'll get an indication after hours. But
Hmm.
we'll see what happens.
Yeah, who knows? But yeah, some of this stuff, it always makes me laugh because, oh, these are we only announce them at this time, but the market seems to be already trading in the after hours and everything else. I think once again, I think it's a lot of bets. The market today started off pretty bad, and it seems like it's recovering itself a little bit now. Just always look at my own personal accounts, and it's okay, it's recovered itself from where it was. It was pretty
Yeah,
bad
it
right
looks
out
like
of the
it's
gate
about
this morning.
recovered about half of where it was down from this
Yeah.
morning.
Yeah, absolutely. All
So
right, dude. Well,
overreaction again.
always over it's the only thing they do. And the funny part is it's mostly computers that do the trading today. And I thought Wall Street needed Prozac, but we need to create some computer Prozac to calm these computers down because they get war. It's like they feed off of each other, which is just
Oh yeah,
amazing to me. All right,
I
man.
agree.
Thank you. We will see you guys back here the next week. And y'all have a fantastic week ahead. And we're rolling into the end of, I can't believe we're already rolling into October, which is just crazy.
I hear you. All right, be well.